The following program is brought to you by Advanced Math Investments.
The opinions expressed on the following sponsored program are strictly those of the host, guests, and callers, and not necessarily those of this station, its staff, management, or sponsors.
Advanced Math Investing Incorporated cannot guarantee the future performance of a client's account or any specific performance level. Accounts are subject to various market, economic, political, currency, and other risks. Advanced math formulas are complicated and their usage may have limitation and difficulties. Welcome to Advanced Math Investing, an award-winning registered investment advisor firm. As the name says, Advanced Math Investing is different than most investing companies. They use proprietary math algorithms to predict the market direction as well as individual stock direction. Advanced Math Investing will give your money the best chance possible in today's markets. And now, your host, Rand, the quant behind Advanced Math Investing.
Good morning, South Florida, and my online listeners and my podcast listeners. Today is Thursday, February 3rd, 2022. It's like 10:04 a.m. Yesterday, Punxsutawney Phil predicted 6 more weeks of winter, but that's really not the big news. The big news is Google and Facebook, and I'll get into that later in the show. My name is Rand Robinson, and I'm the quant and registered investment advisor representative behind Advanced Math Investing. And yes, we used advanced math formulas called algorithms to invest in the stock market, basically in 3 areas. A, we find the overall market direction. B, we find undervalued stocks. And C, of the stocks that we do follow, we ascertain the direction. Makes sense. Each metric on its own should be profitable. Combine all 3 of them, we feel we have a more powerful investing tool. My job here is to teach, inform, and to make friends. And because we're teaching, we're allowed to use audio clips under the fair use section of the U.S. copyright law. So we use those from time to time. Hope they're entertaining. Today's investment word, thanks to our listeners, is diversification. And you know what? Let's look into diversification. If you're a college student or whatever, and somebody asks you a random sample of N samples, how many do you need to have a 95% confidence level, meaning that you're diversified? You guys take a guess. You're probably not going to know it, but a biologist or a statistician should know this. It's 20. But it's not 20 tech stocks or 20 bank stocks or oil stocks. It's diversified over, a few sectors. But then you can say, I'm a new investor. Do I need to buy 20 just to start out? Or if you're a seasoned investor, do I need that 20 to call myself diversified? Well, let's look at that. If you just bought 100 shares of the FANG stocks for your portfolio, okay, Google is at $29.84. This is yesterday's. Facebook at $327. I think it's taking a hammering this morning. We'll get into that. Amazon, $3,073. Netflix, $460. Apple, $174. And Microsoft, $308. If you bought just 100 shares, you would be spending $732,600. And then you would say, well, I'm not even sure I'm diversified. Aren't those all tech stocks? Well, actually, they're not. Interestingly enough, only 2 of them are considered tech stocks, Microsoft and Apple. And they're not even competitors. Microsoft is considered a software company. Apple is considered consumer electronics. Well, what are the others? Well, Google and Facebook are actually in the same sector and are competitors. The sector is internet. So, and then there are other 2. Netflix is in entertainment sector, and Amazon is in consumer cyclical. So you can hold those 6 stocks and, say you're semi-diversified, but there's got to be a little more because are those undervalued? What's the market direction on those stocks? Might be a tough call, and you probably should talk to your advisor if you're questioning what's going on. I'd be happy to meet with anyone to go over their portfolio and your objectives, and I'll give you my email or number later on in the show. Plus, or others would say, well, you know what, I can just buy one stock. I can just buy the S&P 500. It's called SPY as a symbol. Spiders is their nickname. You say, I got 500 stocks. Why should I even bother with all these individuals? Well, That's true, but now you're going to have the top 100 performers in the S&P 500. You're also going to have the bottom 100 performers, and then the middle 300 is probably going to muddle along, and just basically you're just going to get market returns, and that's back to my Ron Popeil statement: set it and forget it. It's not for me. I couldn't possibly charge clients for doing nothing, but that is you're definitely diversified with 500 stocks. But I'd rather do the research on my stocks, do my own picking, and I think some of the listeners are doing the same because you're sending me good suggestions. And your suggestion for the word or a stock or even a portfolio review, you can text me at 954-804-3722 or email me at RAND at advancedmathinvesting.com. Well, let's get back into the talking about, this week's stock. That's kind of the diversity thing. But this week's stock is one that will get you a diversification because it's a restaurant stock. We haven't talked about restaurant stocks. And you can ask, is it time to buy restaurants, or are restaurants still reeling from COVID restrictions and customer hesitancy to go to restaurants? Well, it was suggested that we look at Bloomin brands. The symbol is BLMN. And you've probably heard of the Bloomin' Onion at Outback Steakhouse. Well, that's who they are. That's Bloomin' Brands, the owner of the Outback. Excuse me. It started in 2006 by three guys. They're headquartered in Tampa, Florida. And they own Outback Steakhouse, Carrabba's Italian Grill, Bonefish Grill, Fleming's Prime Steakhouse. And they're also international. They have locations in Brazil, South Korea, Hong Kong, and China. And I think you probably know their slogan, right? No rules, just right. Although they probably can't get away with that in China, but that's their slogan. Anyway, 12 analysts follow this Bloomin' Brands. 9 say it's a buy. 1 say it's an overweight. 2 say it's a hold. There's no underweights or sells. The average target price from the analyst is $28.64. It's selling right now or yesterday at $20.91. Advanced Math, we did our numbers, and I was amazingly surprised. Came out $42.62, way over the current selling price. But I have to give you a caveat that one of my predictors, when I do, the fair value, has a loss for 2022. 2 of the other ones show a gain, but there's always a potential loss. So I'm siding with the gain and keeping that. But you always have to watch the quarterly earnings, because if they have a loss, then I'm sticking with the loss. But I don't think it's going to happen. And I also have a topic I'd like to discuss at the end of the show if I have time. And this is about stocks they call them dual class stocks. Some stocks have no voting shares. That would be your Google, GOOG, that just split 20 for 1. The regular Google that has voting shares, the symbol is GOOGL. And I guess that didn't split, it's still up there. I don't buy stocks that have no voting shares. I'm not even sure what you call them, because if you own a company and you don't get the vote, what do you actually own? It's like I'm going to share a car with you, but we'll share expenses, and if you deliver food, we'll share the gains on it, but I get no choice. Doesn't make any sense. So we're going to talk about others have super voting rights, and we're going to talk about that, where they get 20 votes to year one. So we'll talk about it later in the show. I just got to give you a teaser. I think we'll have time, though. I'm going to give you a market update now. Let's just refresh. I've got the Dow down 289.48. The NASDAQ down 306. That's 2% drop in the NASDAQ, only 0.81 in the Dow. And the S&P 500 down 63.49, down a little over 1%. These are the market, the most active. Facebook, naturally, down $75, down 23.5%. Oof, we'll talk about that. Xylem, it's down 9%. That's a wastewater company, water and wastewater. Amazon, that company, down down 209, 6%. So Amazon's getting it. Well, let's look at the the gainers, even though we're down today. DXC Technology, not sure who they are, up 11%. T-Mobile, you know them, up 9%. Humana, up 5%. Unless, I guess we got to go look at the losers. We're in a down market. Facebook, the number one loser, down 24%. And Xylem, the wastewater, again, down 9%. Maybe they came out with earnings. Amazon, down 7%, down 209. Facebook, I'm going to tell you something. If you listened to my show 2 weeks ago, when I was talking about options, I did a theoretical trade where you could go short Facebook for free, because I also wrote puts on Intel. And I said I wasn't going to do it because I was already short the market. But if anyone listening actually did that trade, you are rolling in the dough, because Facebook has been hammered, and it's been down ever since I made the sell order, or posted it on you guys about buying put options. And you know what? If you go on the radio, if you go on CNBC or any of these other shows, who was saying buy puts in Facebook? That's me. You can call it lucky, or you could say maybe the guy's got some math going on. All right, let's. I'm going to give you. That's part of the market update. It's insider trading. It's not a big amount of insider. CVS, Alan Lotkin is the president of the pharmaceutical division, sold $2.4 million. And American Express, Steven Soveri, the chairman and CEO, sold 72.2 million shares. What was I going to say? It came out, Facebook came out with earnings, and let's take a look at those earnings from yesterday. The revenue was up 20% from the same period last year. Earnings, they dropped 5%. Doesn't seem like a bad earnings, didn't beat on earnings, but they came out with the lowered expectations. They said the Apple was blocking them. They've got currency fluctuations. They're losing, people who use Facebook. I don't know what you call those people, but they're using their people. And they also cited inflation. So anyway, that's why it's taken a hammering, because of the Facebook lowered their expectations. We're going to take a break, and I'll be right back. Thanks.
I ain't trying to do what everybody else doing, just 'cause everybody doing what they all do.
Are you happy with your portfolio performance? Whether you are doing it yourself or have an advisor, if you are looking for an upgrade, consider an appointment with Advanced Math Investing. They utilize math algorithms to invest in today's markets. Text RAND at 954-804-3722 or email them at rand@advancedmathinvesting.com. And of course, he'll return your inquiries.
Okay, we're back, and I'm going to give you some more earnings that are coming out today, just so I cover you all. Amazon is coming out after the close with supposedly their earnings projected at $3.67. Ford's coming out after the close, 45-cent earnings. What is this? I can't even read my own writing. Clorox. Down, up 84 cents, and we did that. We analyzed that a little early on an earlier show, but it wasn't undervalued as I remember. NWSA News Corporation, that's Fox, 31-cent earnings after the close, and Skyworks, $3.10. That's a chip maker that really kind of specializes in 5G. They're projected after the close $3.10. There's a few of them that came out this morning before market opens. Eli Lilly. Symbol LLY, they just squeaked out a revenue beat and an earnings beat. They were projected $2.46 earnings. They came out $2.49. The stock is down 2%. I guess people wanted them to be better. Checkbook software, Checkpoint, they beat on revenue and on earnings, and they gave a positive forecast, and that stock is up 3%. Lulumentum Holdings, which does light, the scan lights and when you do it to check out and various things like that. Their revenue was up, but their earnings were down, and the stock is down 9%, so they're getting hammered. Honeywell, the big defense, and they make thermostats and whatnot, their revenues were flat. Their earnings were slightly up from the previous quarter, same quarter last year. The stock is down 5%, so people aren't happy there. And Estee Lauder, their big makeup company, revenues were slightly up, earnings were up. And you know what? The stock is down just 1%, so that's kind of in keeping with the market. So there were a lot of earnings. At this point in the show, I try to speak about advanced math investing, what we do. But I think I've covered what we do in the previous shows, but I am going to give you a little review. Number one, we're fiduciary. That means our clients come first. We trade your trades first, and your goals come first before anything with advanced math investing. We avoid mutual funds, and we rarely use ETFs. We only use ETFs mainly in the SPDR to short the market. So there's no hidden fees with advanced math. All algorithms can make money in an up or down market. Unlike most advisor firms, you're just stuck on the one way up. Number four, we have no access to client funds. We can't transfer or change your beneficiaries. We're just authorized to trade. That way, everyone, myself included, can be worry-free. I like that. Number five, we invest ourselves in what we put our clients in. So that keeps us focused. If you're in something, I'm in it as well. That's kind of it. Yes, we're stock pickers. And there's a story about a famous stock picker in the news. I mentioned it yesterday, but in the Wall Street Journal, February 1st, Bill Ackman, I couldn't remember his name on the last show, but he famously lost a fortune in Valiant Farm. He has a hedge fund that you can get in if you want, but he famously lost a fortune in Valiant Pharmaceuticals. It went from about $266 down to $11. I think he said he got out around 45 or 50 of those. And also was in the news years ago, he shorted Herbalife and actually said it was a pyramid scheme company. If you guys remember, he wanted the securities SEC to investigate him. The Securities Commission did investigate him, said they were fine. And another stock picker, Carl Icahn, started buying Herbalife, and poor Bill, the stock was rising badly. He had to take another loss, cover his shorts. That's funny. But now he's in the news for a good thing. That's a silver lining. He bought $27 million shorting bonds the other day. This is the article in the Wall Street. Betting interest rate would rise, and interest rates rose, and he turned his $27 million into $2.6 billion. Nice trade in a short amount of time. So what did he do with that money? He bought Netflix, he bought Hilton Hotels, he bought Lowe's, and he bought Restaurant Brands, which is the owner of Burger King. So he's putting his money back in the market. But $2 billion on a trade, I don't have those trades. Wouldn't mind them. I also like to point out that Bill Ackman has a really nice YouTube video that really all investors watch, especially if you're new to investing. And just put in YouTube, and the title is Everything You Need to Know About Finance and Investing in Under 1 Hour. It really is worth watching, especially for new investors. Another point about when I'm talking about advanced math investing, we didn't invent this system for clients. We invented the system for me and my partner, Larry, to make money for ourselves. Larry, passed away, and I thought, you know what, maybe I should share this system with people who are interested. So if you're happy with your advisor, you're happy with your personal, trading the markets, you don't need advanced math. I'm just looking to help people who need help. And along with that, I have a a clip from Eric Burton explaining our philosophy.
I'm just a soul whose intentions are good. Oh Lord, please don't let me be misunderstood.
All right, we're back. That's funny. I promised that I would talk about these dual class shares, and now we have a few minutes to talk about that. And here's the scoop. Mostly the founders of internet companies, they wanted to keep control of their stock after it went public, and so they petitioned to get these called super voting shares that would allow them to keep the voting even though they didn't have a majority of the shares when it went public. So usually they have 20 to 1 or 10 to 1 voting rights. And those are really these new IPOs, internet companies. Initially, only the NASDAQ let these people come in. The New York Exchange, the Hong Kong, London said no. But finally now the New York Exchange years ago said, okay, we're not getting the IPOs, so they came in. And a few years back, maybe 5 years, the Hong Kong finally gave up and said, okay, we're going to allow these super voting shares because they weren't getting the IPOs. But you know what? The London Exchange still doesn't allow super voting shares, although they're claiming that they only have 5% of the new IPOs, and they said they've lost 40% of the actual number of shares traded. So they come up with their solution that hasn't been passed yet, but they said they were going to allow the non-voting shares for just 5 years, and they're thinking about it. But I thought I'd give you some information on these non-voting shares. They're not inheritable, so and Mark Zuckerberg has a boatload of non-voting shares. Once he goes, that's it. They all become regular common shares. And if he sells one of his super voting shares, they also become regular common shares. And he's been selling a lot. You got to give him credit for selling. The guy sold in the last couple of years a ton, so he's been paying taxes on his getting rid of his voting shares. And you figure, well, if he can't take it with him, might as well sell. Another person, Bezos, who actually doesn't have any voting shares, because when he started Amazon, it was just a little book trading company. Nobody thought it was going to be such a huge thing. But to this day, this guy he doesn't sell stock regularly, so he's not paying taxes on his shares. But I think he owns 16% of Amazon stock. That's pretty impressive. Just another thing about these voting shares and non-voting shares. There is one company that does allow the shares to be inherited. It's Ford Motor. I guess back when Henry Ford was getting old, back in 1919 or early 20s, he somehow, this is before there was even a Securities Commission. I think the Securities Commission came in under FDR. He somehow or another got Congress to allow him to pass his shares on. So the Ford family can keep those non-voting shares, and they do. And I guess if they sell them, they become common shares, but they're not selling them. So that's a little bit of interesting news about voting shares and non-voting shares. Oh, Google. I want to mention Google. They had their split 20 to 1, but that was just on the non-voting shares. GOOG is the non-voting shares. The GOOGL are the voting shares. They didn't split those. Kind of weird. I don't even know how they got non-voting shares. I wouldn't recommend anybody to buy a share that you don't get a vote in. Doesn't seem to make sense. But that's what they've done. I guess I don't even know the reasoning behind it. But I just feel that if you own a stock, you should get a vote. And when I talked about the market being a free market and a fair market, well, guess what? Sometimes it isn't fair. You guys get these non-voting shares. The super voting shares. But the nice part is they can't pass it on except for Ford, and I guess they got a pass. So that's it. You can call me or text me or call me with suggestions, and or that you'd like me to look at your portfolio. My Text number is 954-804-3722. Be happy to meet with you or go over your portfolio or give us suggestions on stocks or even investment term. And my email is rand, R-A-N-D, at advancedmathinvesting.com. I'm happy that you guys are listening, and set your alarms to 10 on Thursdays on repeat, and we keep learning together. All right, I'll see you next week, and thanks for listening. Appreciate it.
Thanks for listening to Advanced Math Investing, an award-winning registered investment advisor firm. They actively manage client accounts and want to meet your financial objectives. If you would like to contact Rand, text him at 954-804-3722. For more information, go to advancedmathinvesting.com. Tune in next time to hear from Rand help you follow the smart money.
The opinions expressed on the preceding sponsored program were strictly those of its hosts, guests, and callers, and not necessarily those of this station, its staff, management, or sponsors.